Scott Groves with another mortgage mystery. What is a loan to value ratio, or LTV? Frequently, if you're looking to buy a house or if you're speaking mortgagees, you'll hear this term called an LTV. And an LTV, loan to value, simply means what is the value of the property in relation to the amount of your mortgage as expressed by a percentage. So very simply, I like to go back to my $500,000 example. You're buying a house for $500,000. You're putting 10% down, so $50,000. Your loan amount is $450,000, and therefore your LTV is 90%, meaning your loan in relation to the purchase price of the property is at 90%. Now, this becomes important because different LTVs and different amounts of down payment will qualify you for different types of loans. So, if your LTV, loan to value, is 96.5%, that means you can only afford to put 3.5% down. That's going to define the type of loan that you get. Either a conventional loan with a higher mortgage insurance or an FHA loan, which we also have a video on, we'll link to that you may be getting due to different underwriting criteria. As you start to move up in purchase price, or as you want to get a better structured loan or a better priced loan, the LTV has to go down. And that makes sense, because if you think about it from the perspective of the lender, the larger your down payment, the lower the LTV, and effectively the more skin you have in the game, the better lending terms you should be able to get. Now, this also comes into play when you go to refinance a mortgage. Let's say, for example, back to my $500,000 example, you had previously bought a house at $500,000 with 10% down, and you now owe $450,000 on the mortgage. But you bought at a great time in a great market where property values are going up, and now your property is worth $600,000. So now you have a house that's worth $600,000, a loan at $450,000, and $150,000 spread of positive equity that's in the house. That means, in this hypothetical, your LTV, or your loan to value, your current loan balance versus your current value of the house, is now at 75%. And this can help you qualify for a cheaper mortgage, a lower interest rate, or a mortgage without mortgage insurance. Check the video below for the video we did on private mortgage insurance and FHA mortgage insurance. But overall, this is just a term that you might hear thrown out. It can confuse buyers, it can confuse realtors, and it's one of those things that lenders get so used to saying that they might say it so nonchalantly that you're embarrassed to ask the question, what is an LTV, or what is a loan to value ratio? If you have any questions, or you're working with a lender who happens to throw out a lot of jargon and you don't really feel like you're being educated, get in touch with our team. Shoot us an email, give me a call, schedule some time directly on our calendar. We would love to help with your mortgage for either the purchase of a new home or a refinance. And if for some reason our team is not licensed in the state where you're currently buying a home or refinance a home, we have a pool of lenders who we can refer you to make sure you're working with a top-notch loan officer in your local area. Scott Groves, Mortgage Mysteries. Make sure you click the like button, you leave a comment, or you subscribe to the channel. We do this as a free service to educate borrowers and realtors, and we hope you enjoy it.